Hello, I'm Benoit Poliquet. I'm the founder and one of the portfolio managers here at Exponent Investment Management, and you're looking at the second quarter of 2025 review. So let's get started and look at our first and usual chart. If we look at the box, it's been really a frustrating period, certainly for the second quarter of 2025 for investors. You're looking at really stellar returns, almost 9%, almost 5% in Canada and the US. This is in Canadian terms, almost above 11% for the NASDAQ. The 1-year numbers and the 3-year numbers are still well above trend. Europe, nothing going on there, but we're still doing pretty decently on the 1 and 3 years. Emerging markets had a really good quarter. 50% of the emerging market index is China. Um, Good on the 12-year, but still lagging on the 3-year numbers. By all means, what we're looking at, the gold price is the winner, 7% again this quarter, 43% on 1-year basis, and almost 23% annually for 3 years, for the gold price. On the interest rates, we're looking at about 1.2% lower rates this time than a year ago. So right now you can get 2.8% on a 5-year bond for if you lend money to the Canadian government. This time last year, you're almost at 4%, sometimes above 4%, depending on where you were in the quarter. Same thing for the 10-year number, and the GIC rates are 3.8 and 3.4. So let's call it sub 4. And a year ago, you could get sub 5, close to 5, depending where you were in the quarter. So politics, do they matter? I mean, politics really drove the narrative this quarter. Markets are on fire, but it's not democratic. Most stocks are not doing that well, which is interesting. And it kind of fits. I mean, if we are, high degree of geopolitical turmoil, we're talking about elections, so policies and politics are front and center. The US didn't have elections. We certainly did. But the US has a new administration, and that brings change. Talking about elections in the UK, elsewhere in Europe. So there's a lot of sort of uncertainty, if you will, from a climate perspective or investment climate perspective. Is our loonie on the mend? We had a pretty good quarter, but we had such a rough first quarter of 2025. Is this just going back to normal, if you will? Interest rates are falling, so they're lower, which obviously is good for stocks, but oil remains uninspiring, and oil is kind of an industry. It's a good look into what is inflation doing. So if oil is down, inflation is not doing a whole lot. So it's very interesting to see. And I would say frustrating. So why do I mean frustrating? Well, I might call it undemocratic performance. So again, I've made a lot of videos on this in the past. You're looking at some very focused performance. So if we look at the last 250 one day, so basically a year on the S&P 500, you've got consumer services. So that's a form of technology. And you've got a negative return on technology, was very interesting. But within those technology names, you have some very, very focused, some outstanding, great performing names. So although the sector didn't do well, some names in the sector did a spectacular job of performing. Utilities did okay, so that's kind of normal. If interest rates come down, utilities tend to do well. Financials for the same reasons. So you really had sort of but then healthcare lost almost 19%. So think about that. A lot of healthcare companies have lost, if it was worth $100 and now worth $80. Energy, almost 20%. So basically, if you had a broad portfolio and you add all these numbers up, it was tough to kind of have index-like returns, very focused. And it's just not in the US. Canada had the same issue. So in Canada, we had info technology, which is basically two names. And then we had materials. All right, gold did well, so minings did super well. So that makes sense. And then the financials, again, interest rates are lower, but everything else, negative. So very, very frustrating, especially if you're risk adverse or sort of more conservative. Say you own a lot of telecoms or some telecoms or some healthcare, you would have sort of lost money on those sectors. Same with real estate. So it's very, very interesting to see those types of numbers. So you have these published indices that are doing awesome, and then most people's portfolios are doing maybe half of what the published index returns are making. So it's a frustrating time to be a diversified, well-balanced portfolio owner. When we look at the headlines that would explain this type of undemocratic return, so what I did, everyone's talking about AI. So I asked AI, what are the top 5 headlines from a investment perspective? Now, I'm not sure I agree with the results. So maybe It's more artificial than intelligent. Who knows? Anyway, kidding aside, the number one sort of headline was the trade deficit. Number two was been Canada becoming a global energy powerhouse. Three, trade negotiations. Okay, that fits. Number four, public backlash against a resource bill. Okay. And then kind of a change in political moods from a business to a more business friendly, if you will, Canadian government. Well, that will be interesting to see. But, there's no talk of immigration here. Certainly that would have an impact. It has an impact on demographics, on rents, on a whole bunch of economic aspects. ChatGPT didn't mention it at all. And certainly I wouldn't have put number one as a trade deficit. So it's kind of interesting. Got to be careful with AI. It doesn't always give you the answer you expect, whether you agree with it or not. US kind of a weird thing too. So you've got job growth. Okay, number one headline makes sense. Really low unemployment at 4.1. But the second sort of highlighted headline is the economy is showing signs of strain. Well, that's interesting. So you're looking at a really low unemployment and tough economy. So those two headlines kind of conflict, or not kind of, they definitely conflict. Rates, not a whole lot of changes. Everyone's always worried about inflation, so there's nothing new, and everyone's worried about a weaker forecast. So, okay, but certainly tariff day, escalation, I would have put that number one, but ChatGPT put it number four. And JP Morgan is warning of stagflation. So what is the meaning of that? Well, basically, and that is standard. Whenever you've got uncertainty, investors don't want to replay the 1970s, which was what's called stagflation, where you have no economic growth and rising price of goods and services. That's sort of the nightmare scenario for all economies. So if we look at graphically what happened with the portfolio or the index. So in Canada, we had sort of, let's call that the temper or the tariff tantrum. And why did investors sell off? Well, investors tend to sell off whenever there's uncertainty. So everyone knew and expected tariffs to come in. But when the announcement came in of very, very heavy tariffs, market sold off. And then it rallied as it's even got an acronym now called a taco trade. Trump always chickens out. But the idea is investors kind of rallied back into the equities when the concept of anchoring high to get a better deal from the Trump administration kind of started to dominate the investor narrative. So we sort of had a 10% downdraft, bit of a rally, give back, and then we move forward. So the Canadian market did that. If we move to the US, it kind of did the same thing. The graph is very similar, 12% downdraft this case. So the technology names really, really sold off. So if you added to technology at this time, you would have done very well. Sort of a rally, failed rally, and then again, we're off to the races again. So same concept. Tariff tantrum, sell off, everyone's kind of worried, and then people kind of realize, okay, maybe this is not going to be as bad as we thought. So when investors are spooked, they tend to sell off, and then they lean into it. So takeaway of the first concept was, okay, it's an undemocratic market rally. And the second one is politics don't matter, but policy most certainly does. So I'm going to use to illustrate the concept, I'm going to use cars. And I'm going to explain the fact that pickup trucks they look way bigger. So you can see those are that's a 2005 Silverado, and that's a 2025 Silverado. It's oddly enough kind of the same width and length, is just way higher. It looks way bigger. And there's a reason for that. So some policies are elaborated to improve society, right? So who can argue with smoking bans in public areas, especially airplanes, seatbelt rules? We can argue that those are great ideas. So the United States Environmental Protection Agency, or the EPA, really had a lot of say on what kind of cars we drive. And that's the policy I want to talk about for a minute. So in 2005 or in the early 2000s, and the rules came in effect in basically 2011, the EPA came out and changed the rules around how car manufacturers, what kind of targets they needed to meet in terms of fuel mileage. They're called the CAFE standards. And what they were trying to do, the mandate was obviously not supported by car manufacturers, and there was a lot of lobbying, and they were argued against, as they say, it would limit choices, require retooling, investments in R&D. And let's be honest, no one likes a new set of rules, so it's natural that they would argue against it. But they did make a good point that the EPA acknowledged, which was, look, we're going to come up with two sets of rules. And we're going to come up with a set of rules we'll call the footprint rule. So the idea was for cars, improve and make really stringent mileage targets based on the length and width of the car. So the footprint or square footage. But we or the EPA, came out with a different rule for trucks. And so it kind of had a perverse effect that larger vehicles that fit the truck criteria had less strict fuel economies. And so the incentive, it actually created a whole new sector of cars called SUVs. So if a manufacturer can make a truck or a vehicle that fits the truck standard, it actually gets to get a lower fuel economy requirement. So bear with me here because this is really interesting and illustrates the fact that politics don't matter as much as policy. So in graphic form, this is what we mean. So the square footage is on the x-axis and the y-axis is the target, what's called combined MPG or mile per gallon consumption of fuel. The red line is the passenger cars. It's significantly higher than the green line, which is for trucks. So if you ever wondered why there are no small cars anymore, so think back to 2005, something like the Honda Fit. So 20 years ago, that car kind of was basically 70 square feet in terms of its footprint. And the mileage on it was 32 miles per gallon, which was considered pretty good at the time. But under the current rules in 2025, the car it cannot be sold because it consumes too much fuel. Now, the reason is in the US anyway, you need a car that basically goes 80 miles an hour. So there's a certain limit. You kind of need a basic size. And don't forget, there's also crash standards, and the car needs to go 80 miles an hour and it has to keep up with traffic. So nowadays, the smallest car Honda will sell you is a Honda Civic. And it's not even on this chart. It's actually 90 square feet. So it does meet the EPA rules. So in fact, there's kind of this incentive on the part of car manufacturers to make the cars bigger in order to sell them, because the bigger the car, the smaller the easier the fuel economy target. Now you could add electric technology, and obviously in Europe and here in Canada, and up until I guess last year in the US, there was this incentive to electrify and add, whether it's all electric or hybrid technology. Now, when you do that, you are adding costs. So if you compare a Honda Civic hybrid to its non-hybrid version, the hybrid version is about 15% more money. You're also adding complexity to manufacturing and design, so that raises the price. And then also you're reducing the longevity of the car. Now, to some people, that may actually be triggering, but I will just counter and say, well, think about your cell phone battery. How long does that last? Now take that concept and then apply it to a battery that has to go to plus 30 degrees Celsius, minus 30 degrees Celsius. It gets recharged and discharged every day and so on and so forth. So versus a car that has no battery or just a starter battery, the longevity of the car with no battery is unequivocal. So, which is interesting. So basically, if you reduce the longevity of the car, then the car has to be replaced more often. So you're trying to hit, which is a laudable goal, less fuel consumption, but you're actually going to replace cars more often, all else being equal. So policies do matter and they have their effect. So why am I bringing this up? Well, one more slide before the why. I can compare here these two Chevys, 2005 Silverado and a 2025. The mileage difference with all the rules and regulations and all the different things that Chevy had to put in, 3 miles per gallon different. And if we look at the different sort of results, the truck, the 2025 is heavier. It's got a bigger transmission. So one could argue maybe that's part of the reason why it's heavier. You'd also add technology, safety features, and so on. The footprint is bigger, 6 square feet or about 5%. So the car with EPA rules is bigger. It looks a lot bigger because it's higher. I want to get into the rules why that is the case, but actually that is also mandated. And I'll tell you real quick, it's basically due to the crash testing and that sort of thing. So the units sold, well, that worked. All in all, there's less units being sold and there's more cars being sold. So obviously from a market share perspective, pickups are less, which is to some might be very surprising. And the MSRP, that really surprised me. I was expecting costs to go up, and actually inflation adjusted, the 2005 Silverado was more expensive than what the average Silverado costs today. So that was kind of interesting. But all this to say that there was a lot of policies. But so what did the consumers do? I mean, at the end of the day, okay, you can't get the Civics are bigger. You can't get a Honda Fit. And we know these rules. If you fall into the truck category, you have easier rules to abide to. And so you create the SUV. And that is the conclusion of this. The policies of having lower mileage means that nowadays, the days of, the average car consumption actually got worse over time, because in the old days, you had Accords and Camrys and Civics dominating the driveways, and now they're replaced by Chevy Tahoes, Honda Pilots, and the Toyota RAV4, which is the best-selling car in 2024. So very, very interesting unintended consequences from these policies. So a bit about those rules, kind of a flow chart. If you fit into an SUV and you want the easier rules, if you will, from a filer's perspective, you raise your vehicle, you add four-wheel drive or all-wheel drive, and you get to fold the rear seats, and all of a sudden it's a light truck, and you get the light truck regulations and EPA. So ultimately, in 2005, the best-selling car was the Toyota Camry. In 2024, and I'm projecting it to 2025 here, the RAV4 is the best-selling car in the US. Very, very interesting. And one could argue, well, it should be the F-150 because that's a truck. Again, let's bear with me in terms of the rule. So why does that matter? Well, when you're coming up with an investment policy thesis, there's these prevailing winds, and the concept here is government policies matter way more than the political noise that you will read or hear about or watch on social media. So policies really, really matter. And then the next leg of this is that once you understand the policies, it's not our job to judge them. It's just to understand them and then find companies that will benefit from these new policies. So if we take the car business, who benefits from bigger cars, more complex cars, bigger costs in terms of the different components? Well, you could certainly insurance companies, you will see those in your portfolio. You could see auto body repair chains, you could see replacement part manufacturers, even chemical companies. There's more and more plastics being used in cars now than there were, say, 20 years ago. So there's a lot of these sort of policy changes that create tailwinds for certain businesses. And that is really the takeaway from this slide. So while politicians captured the airwaves, sound bites, and social media, they will never have the influence that faceless bureaucrats will ever have in terms of influence policies and influencing your portfolio over the next 5 or 10 years. Which explains why we have these immutable concepts that we focus on: dividend focus or share buybacks, quality balance sheets, proven management. These things really, they don't change no matter what the policy or the politics. But when you make adjustments, you have to make these adjustments and understand the different policies and their impact on whether it's deglobalization, inflation, and their impact on consumer patterns, migrations, again, coming back to immigration, migration, housing prices, policies, demographics, and we focus on government policy. You've got to keep an eye on that. And that sort of leads to perhaps more volatility. So you have to instate these different things where you want to add a little bit more trading activity and certainly a more stricter rules around in portfolio management. On that note, thank you very much for watching. If you have any questions or comments, by all means, drop us a line. Thank you and have a great day.